Good morning. Good morning. Good morning. Good morning. I'm just listening into some China news, so just give me a moment here, and I will be with you. This is probably going to be something worth discussing. Should be a pretty good time here. Okay, I am here. I'm just going to listen into this last bit of news, and then I'll give you a report. Got a little trade on here. Hmm.
I think I'm in, mate.
You are in, mate. Yeah, sorry. I am
Happy
here.
that.
I'm just listening into some news here, just so I can give everybody a little bit of an update on what's going on. With
Okay.
this morning.
You want to listen to that, and I'll do a couple of things.
You go for it.
Got no idea what, but let's see what we can come up with. I think I'll have a look at the dear old Forex Factory and see what we need to be aware of in terms of news today. Let's do that, shall we? We've already had, of course, Aussie news, the RBA statement, interest rates, etc., etc. Alas, I can't find my Forex Factory. Why is it so? That's bizarre. All right, we'll just go into it again. Not the end of the world. Of course, the RBA statement that I have read was pretty benign, not a whole lot of change, pretty much cut and paste from the last couple, so no surprises there. And I haven't had a look at the Aussie in the last little bit, but I don't think it moved too much as you would expect with no change in the cash rate. And a benign or neutral, if you like, RBA statement, cut and paste, as I say, from the last lot. Upcoming, what have we got? Services PMI in about an hour and 50 minutes. We've got Carney speaking later this afternoon, London time, and the Reserve Bank of Australia's Governor Philip Lowe will take to the stage, or at least the microphone, overnight for most of you guys. So really, not a whole lot in this session to be that concerned about. I guess actually I'll have a good look at services PMI, but it won't affect me too much, I wouldn't think. What if anything, am I looking at? Is the question. I am looking at one thing, and it's not that. It is, in fact, blooming cross. I forget the cross now. Oh dear. Was it Aussie Cad? Aussie Kiwi? No. Euro Aussie. I'll get there, guys. It's not Donnie Yen. It's not the Aussie. Run the other things here. That's a bit weird. Ah, there it is. Aussie CAD it is. So Aussie CAD on the 30-minute chart is very toppy. That's what I was looking at before. And I don't know about the Aussie. I've got to come back to the Aussie, I suppose, to explain what I'm thinking here. So the Aussie with the 4-hour chart and the daily chart is showing me that there's potentially a little bit more downside at least. Coming off the top of the channel, we're underneath the daily pivots, and I see this level as another testing material. So whilst I was prepared to be a little bit bullish yesterday, the Aussie, I think I'm only up to a point, and I want to see some support hit first. If I go to the 4-hour chart, there's really nothing there that tells me there's any bullish activity about to take place at all. These candles are not saying let's go long to me in any way, shape, or form. So I've got to have a little bit of a bearish outlook on the Aussie. And the CAD, I like to draw a line through oil when I have a look at the CAD. And the daily candle on oil today or yesterday is pretty similar. I've got to say, there's nothing there to be thinking long at this point. In fact, we've got a monthly pivot underneath us. So I really don't have a good correlation in both of the crosses against oil in particular for the CAD and the dollar in particular for the Aussie. So I think I'm free to trade whatever I see before me without taking any consideration of what's likely to be at support or resistance. So let's go back there. And all I really need to see here is something of a reversal bar giving me a 1, 2, 3, 4 quintuplet top, if you like, and then look for a little bit of a lower high on the 30-minute chart, and away we go. I think that's probably where I want to be. Impossible to go long at this point, so that's really what I've got in my mind in terms of Aussie CAD. A couple of others that were kind of interesting. The euro, I had a look at this bar when I was doing my analysis early this morning, and I thought, oh, that looks interesting. It's at a support level that's at last week's weekly pivot, and I'm screaming out for a test of these pivots to give me essentially a lower high to go short. So I'm thinking 30-minute chart, I might even be able to find a sneaky little long, targeting, well, first instance, the daily pivot, and then up to the pivots monthly and weekly, and then look for a reversal bar and look to trade it short. So that's kind of interesting on the euro. The Aussie, as I said before, if we have a look at, well, let's have a look at the news first and what happened during the news. News happens in Australia at 2:30 p.m. Australian Eastern Daylight Time, which was 4 hours and 13 minutes ago. So 13, 1, 2, 3, 4. There's the news candle there. You see there was some selling into that. In fact, the selling that preceded the actual news events was far more impressive, if you like, than the news event itself, which really, as you can see, did nothing. There's always some kind of a reaction to an interest rate announcement in Australia. For whatever reason, the market gets ready to do something, and it rallied for a bit, didn't even make the daily pivot. Then it sold off for a lesser bit before closing just a little bit down on the half hour. So we're right back there where we started, and really, as I said before, the Aussie's done very little on the back of really a statement that said nothing and no interest rate rise. So we're kind of back where we were. Interesting, these two bars, I don't know whether they were preempting the news or whether they are serious sellers in the market. Maybe they are, because after all, it seems to be the flavour of the month, does it not? Well, not so much the month. Well, the month, if you like, it's only 5 days old, but I don't see anything there that really excites me, I've got to say, either way. Pivots up here, don't want to trade into the lows, don't see a reversal. We had a little tweezer bottom here yesterday that looked interesting on the 30-minute chart, but didn't pan out to anything. I suppose if you got in here, you might have got a few pips out of it. But overall, I think it's a fairly lackluster pair to be looking at. Cable, the daily chart on cable has me thinking we are at a, or maybe we were at a strong resistance area, in this case support. But we skipped through that yesterday and closed below it. We even gapped down this morning. We haven't been able to recover that yet. The gap closed quickly, of course, but it was only a tiny gap. We've got pivots above us that are untested, but we've broken below this very steep channel.
Sorry, mate, I was just going to say that there's a trade on. If
okay, go. Trade.
Yeah. I mean, I'm in this trade already. I've got a slightly higher price, but it's pretty close to my entry. And if anybody's interested in this, it may not be to everybody's taste, because we're above this this daily pivot and weekly pivot. I got in here. I didn't take profit here, and as it happened, I probably could have done. Well, I should have done, really, because I could have re-entered now. But I don't really like messing with trades when it hasn't hit my target yet. I'm really aiming down here as a first take profit area, and I'll show you everybody what exactly I'm looking at here. So if we there's a little potential diamond pattern here, which we'll look at in a minute, because that's the micro detail. But this is the daily chart, and I liked this area because it was a retest of the breakout point here. The retest of the support area is also the topper end of this this head and shoulders pattern. So that's what's got me into it. Now, obviously, if we take out these highs, then things will change. Now, I've got this up here because I wanted to leave that overnight, but I'm going to take that away. Because I might well hedge up the top of this instead, because there might well be just a little bit more room up the top there. So we'll watch this. We'll watch today's range and see what happens. But looking now at the hourly, and then we'll check the 5-minute chart for what looks like an entry. In fact, let's look at the 5-minute chart first, because this is what's given us the entry here. This is the entry here. Also a little head and shoulders pattern potentially, but it looks like it's there's just a little trend line along here that if it comes under this bar now, that would appear to me like it could be an entry. Maybe everybody's more comfortable coming down here. So I'm looking at the 5-minute chart here. So you could be looking at something that could be about 4 or 5 pips as an entry. So you could look under this bar as a potential entry. Let's quickly talk about the diamond pattern, because the diamond pattern hasn't yet formed. We don't really know that this is going to happen or not. But if the diamond pattern does form here, and I'll talk about the entry that I took in a second, because I think it is a Jeff special, and that's why I took it. So we'll see what Jeff says about that. But this is the potential diamond pattern. Let me just change these properties for everybody. Not sure whether this this diamond pattern plays out, because we're not sure at this stage whether this area here is the right-hand side of the diamond. But if it is, the diamond pattern will run down here. From this point here. Now you want touches with the diamond pattern. So you see these touches along here, and as I say, we're not too sure about this one, but we'll see whether that one does hold out. That looks like the other end. Now with the diamond pattern, the way that we measure it is again from the higher end to the lower end. Now we can be conservative or we could be aggressive, depends on we could actually measure the top end of the diamond to the lower end. That's the traditional way. But if we go slightly less aggressive, we'll do this on 2 fronts. So a breakdown of this low here leads us back to near where I'd like to get to, not quite, but if we do the diamond pattern for the way that it should be measured, that leads us down there. And then depending if it breaks out, if this is in existence, that leads us back to these lows. So that's going to be my target down there. So let's see what happens here. Now you might be more comfortable again, seeing if you can get that that low taken out this point here, which is not too far away, about 10 pips from the current price. So you could enter here, or you could look at the break of the diamond pattern and then aim down here. Stops either at this high point here or up here. would still get you a pretty decent 2-to-1 trade, fairly close to 2-to-1 trade if it comes down to this point. If you want to be more aggressive and just put it above this trend line, then obviously that's going to be multiple to 1. I don't know what. Let's see what it would be. That's about 20 pips ish, and that gets us down to near 80. So it's about that'll be about a 4-to-1. So you got to, potentially two choices. As I say, the 5-minute chart is the thing that's given me that little bit more detail, because the 5-minute chart is suggesting that the diamond patterns level is there, and it looks to me like we may well have broken through that particular point. So that is the trade. Still valid, not so far away from my entry that it wouldn't be valid. And as I say, you could go aggressive, having stops at where my entry is, or you could put stops up at this point here. Now, we have to consider what is driving the markets, and I've just been listening in. The trade war situation is still really in the balance. There doesn't seem to be any specific news on the trade war, and if that's clearing up. It just all we've really had is the potential for the trade war to be ending, easing, I should say, but we don't really have any specific news on that. We don't have any specific detail, and with that lack of detail, it may just kind of make investors a little bit jittery about the markets, for a short period, which could well see us down to the targets. Now, again, if we look at this target one more time on the we can do it on the 5-minute chart. That's fine. So we're going down there, and the breakout will be somewhere around here, I guess. Let's see what that looks like on the hourly. Yeah, it depends. It's probably going to be that low there. So let's just mark this level off here. Bring it back to the daily chart, and we can see that would be the neckline. So we're aiming for something around about 70 pips to the downside, 70 to 80 pips to the downside. So that is a potential trade if people want to take that. The trade war is obviously it's kind of the elephant in the room, if you like, because the issue is that there hasn't been the detail. And with a lack of detail, then that could actually drive us down. But it could be just enough to keep this buoyant as well, as people wait. So it's a little bit of a guesstimate rather than anything significant. But certainly this bar here would suggest that there's enough weakness with a lack of news that we would at least drive back to this low here. So I'm looking into that. I'm looking to see whether that's going to happen, and we will see whether the first session can get us down there, and if the US session gets us right down here. Again, you could take profit here. There's a few different ways to manage this trade, and if you can get in, then my intention would be to try and help you get into a trade, and then allow you to manage it yourself, because we all have different money management techniques. They will be completely different to mine. So if I can get you in here, that's going to be a good thing, and then you can choose whether you want to take some profit at this low or aim for the whole trade down here. If you do get in, stops here or stops here would be the other two possibilities there. So yeah, just to quickly bring you that, mate, that may well shape up early this morning. What would be really useful is a 4-hourly bar here. This 4-hourly bar, if we get basically an hour's worth of negativity, this 4-hourly bar, again refusing this upper level, would be very helpful. If we do take out this high, then that would probably start to change the shape of things. So that looks to me like a pretty sensible place for a stop, and you could probably then live through a little bit of volatility if it happens. So this high is the key area. So if you look on your 4-hour chart, it's the high and then the sweep down. Now let's find out whether this would be a Jeff special, because this is the
where do I come in?
Well, this is what I saw yesterday, and I was thinking of you when I saw it. The trend line along here, which got taken up and then it got taken out again. So I'm not saying that the entry would have been the same as yours, but I would suspect that you'd seen that as a pretty strong indication that that there was some weakness in this particular area.
What time frame is that, mate?
This is the 4 hour.
Okay, so that's probably going to look very interesting to me on an hourly chart, I should think, or a 30-minute chart. And I'll check that.
This is the hourly.
Yep. Okay, so 30-minute.
This is the 30-minute.
Yeah, it just doesn't quite make it. Had the first bar that broke been followed up by a bull bar, that would have interested me.
This bar here?
No, sorry. Break
I see. Yeah, that followed by a bull bar, and then I see. Yep. Okay.
Effectively, you've got the same thing because it did come back and test the trade line or trend line.
Yes. Yes.
Maybe on a 5 or a 15-minute chart, that would be exactly what I'm looking for.
Yeah. Well, this is a 15. Still didn't really test it.
That's it. That's what you're looking for.
Oh, that is. You'd like that?
Yep. So you're short underneath the green bar. Yeah.
Short underneath this one.
Yep.
Right. Yes. Yeah. I see what you're saying. Down and then back up again. Short down here. Yeah. Which is pretty close to where we are actually. Oh, well, you probably would have taken profit by now, but
I definitely would have taken profit by now. But had you I'm struggling. I don't know what I want to say. Had you I've got no idea what I was going to say. That craft crept in very, very nicely. But that's precisely what I'm looking for. Oh, okay, that's what I was going to say. You could have put your stops above that the bar that took out the high of the green bar as well. So it would have been a nice tight little stop as well.
This one here.
Yep.
Yeah.
But you say I'd be out by now. I wouldn't still be in that. So you would have got 2 to 1?
Oh yeah, easy.
Yeah.
Easier 2 to 1 on that.
Yeah, I would have been out at the first. I would have taken profit at the first support, which is the swing before the swing high.
Yeah.
So the swing just above your cursor there, the swing low. That would have been first profit.
Yeah.
And all out at the close.
Low down here.
Yeah, there.
Yeah. Yep. Yeah. Yeah, so they it would have been managed completely differently. I mean, looking at this this area down here, that really should have been my the area that I came out on, but other things were going on, and also, I quite like the potential for this to give me a longer term trade, because really what I'm looking at here, and what I've been waiting on is this market to break down. I've been looking at this for quite some time, that the market was going to break down and retest these areas down here. And I've been in a couple of trades. I think I've got in along here at some point. I've got in along here at some point, taken little bits out, but nothing has really kind of driven it down low enough to give me really what I'm after, which is some tests of some areas. And this is another price point here, so that wouldn't, I wouldn't be adverse to that now if it comes back down here, because that now is going to pretty much equal these lows down here. So it comes down here one more time, then I'm looking for the neckline. But yesterday's bar, the price action just wasn't deep enough, so I've got a take profit area down here, but that's really my my all out kind of scenario. But I might well be all out at this point if it starts to break down. As it happens, the price is just about to open up, and the market is 10 seconds away, and actually it's pretty much back to my entry point.
What chart's that, mate?
This is the daily.
Okay. Yeah, you're on the futures, aren't you?
Yes.
That's why it's different. I'm looking at the yesterday's bar, and it looks very far more interesting on your chart than it does on mine. Yeah,
the cash. Let me just check. I mean, I find this. Yeah, it's very, very different, isn't it? The cash is a difficult one because this UK 100, it's neither cash nor futures. I find it a bit of a difficult one to use, because the market, you know, obviously the FTSE 100 closes at 4:30 UK, but the UK 100 closes something like 9 o'clock. So it kind of like is a combination between the cash and the futures. So I find it a bit of a tricky one to use because it's just not a very not very pure option to try and trade with.
Okay, fair enough. I'm just having a look at these opening candles at the moment.
No
Not
problem.
that I'm looking to trade any, but it may be setting something up for me.
Now, incidentally, as well, the People's Bank of China have also just reduced their growth targets a little bit as well. So that may also help this trade out. If the market is going to go lower. If it's not, then as I say, we'll manage this. This isn't a bad spot, because when it comes down to it, if we do need to hedge at any of these points here, then I would have thought at some point we're going to get back down to here. The question is really where we hedge, and that's always going to be the forward thinking. How are we going to plan to manage this trade? And the hedge is no different than a stop in many respects. So where you guys are going to be thinking about stops, I'm thinking about hedging. And the reason that I wouldn't encourage people to hedge until you've been trading for a little while is that when you hedge, remember, you've got 2 positions open, and that does require some pretty intensive management at times. So the other option is to put stops in the similar kind of areas that I would hedge, and then just re-enter if you're still convinced that the market is moving to the downside. So maybe a hedge at the top of this bar, or maybe at the top of the level here. Sorry, a stop at the top of the level. So you just have to kind of like make your own choices on that. I'll be looking into that. If price does start to creep up here, I'm going to have to do some analysis on that. When I was kind of thinking about this last night, I was thinking I'll probably hedge above this bar here. So I think that area there is for a stop would be more than adequate, because then you're looking at this potential point up here for another entry, which gives you 50 pips, not to have to lose out on, maybe even 60 pips if you're having to put a stop at this point here. So there's probably an area that you're saying we're wrong here, and the reason that I would suggest we're probably wrong here is because the overriding pattern here is this head and shoulders pattern. So if we're going to look at the head and shoulders pattern, then we have to look at where that head and shoulders pattern breaks down, and it is the top of this bar. What can happen, of course, is that the price will go up, touch it, and then maybe make a higher, and then still refuse that area. There might still be some negativity and some volatility up at this point. So we have to be very careful how we judge price when it gets up to these levels. How will it end? Because when you think about this from yesterday, this is what we had. This time frame here is midday, and then it just started to kind of come to the downside. And by the time we got to this point here, the UK market had closed. And then we started to really move to the downside fairly swiftly. So there was some price action late in the day, and then really as the US kind of was getting close to closing up, it would just ground itself forward again, and it ended up closing there. That was the last bar, just there.
I kind of missed everything yesterday. We had a blackout, and I had no charts, no nothing. So I had the day off pretty much.
Oh, very nice, mate.
After we closed this show, I was pretty much out of it. Oh no, I started the later show, but I think after about 5 minutes of that show, I just lost power.
Yeah, well, you were struggling to get on with Jules and Paul and I, weren't you?
Yeah, couldn't do it.
Yeah. So
what happened? Was that a good chat?
We had a great chat, actually. Yeah, it was very interesting. It was it was an interesting day yesterday, because I knew I wanted some down. I'd kind of made the decision that I wanted some downside, but my issue was that the trade war rhetoric was quite positive, and I don't really, if I'm trading on fundamental announcements, which I am, I'm much more interested in the fundamentals than the technicals overall. When you get something which is I guess net positive when it comes down to announcements, it does start to question what you can do, and I was kind of willing just to let things pass. So when we were open yesterday, it's the 4th today, isn't it? When we were open yesterday, we did see some potential weakness, and there was one bar that during the show, and it was this bar here. During the show, this bar here was obviously the price action was below this area, and I was saying if we get a close below here, then I'm going to be shorting this market. But as it happened, it didn't do that. It gave us this this spinning top, and then the market started to take off. So after I saw the market taking off on an hourly time frame, and I was looking at this trend line that we were poking through, I figured probably not right here. This market is probably going to go long, and I was wondering whether I probably should have got in down at these lows here. There was an opportunity down here that I decided not to take because I'm still a little bit. The market is a bit questionable for me because of the lack of tests of the breakout points. So technically speaking, the market looks heavy, but fundamentally that wasn't really filtering through because the trade dispute had seemed to have cleared. But as time went on, and I was looking at the Asian charts and the Asian markets, which were a pretty good barometer for the move yesterday. This is what we had. We had it up and then shoved straight back down again. Now it has recovered somewhat. This is the Chinese market here. It has recovered somewhat, but that looks pretty negative. That looks like a fairly complicated looking head and shoulders pattern there. So there's not a great deal of confidence. What's that, buddy?
I say it's complicated, all right.
Yeah, it's a tricky one, isn't it? And when you look at the Chinese indice, it's a kind of this will be a very difficult chart to trade. It's the ranges aren't very clean. The touches aren't really there. So that's a bit tricky. This is the Hong Kong market. Same thing happened. It just took a dive bomb after hitting the highs. Now, if a trade dispute has been cleared, why aren't we taking off? Was at the back of my mind. And then finally, I was looking at the Nikkei, and the Nikkei was the same story. So there wasn't the confidence that to my mind should have been filtering through after an announcement that seemed to be coming into the market. So I was questioning whether the reporting was either correct or significant, and as it happened, it was really the latter. The reporting isn't significant. There's whispers that they've done a deal. There's whispers that they are fairly close to the end of negotiations. So I still feel comfortable enough trading this to the downside, even though there's that positive news. And really, I'm looking for downside so I can get a trade down. So ultimately, I do want to trade this long. There's no two ways about it. But I want it a bit lower, and that bit lower is quite a bit lower from where we are now. And I think it's worth trying to trade this in the opposite direction. Obviously, the other option is, if you are ultimately bullish because of the dispute seeming to be clearing, then you just wait until the market comes back. But I think there might be an opportunity to trade the fade here, and that's what I'm looking at trying to do.
Cool. I love trading the fade. That's one of my faves.
Yeah.
You got the chart. I actually found that chart that I was looking for earlier. Okay. It was the euro at the end of the day, but I couldn't find the right time frame. Nor am I on it here, but this is very, very much the same thing. We've got a series here of high test bars at this level, which is 114. The figure pretty much, and pardon me, it's even more evident on the daily chart. So this tweezer top sitting here at that level is pretty much a very bearish signal. And we have seen that happen. But that was the point I was trying to make before. I see downside in the euro probably not breaking through the big levels. I'll just make that a little bit bigger, so that's a day thing. There we go. So if I'm thinking short here, I'm not thinking short beyond that level there at all, which is right 112. Let's say 113. I wouldn't want to be trading below that until it's broken. So when I was talking about Euro CAD before, that's what I was trying to line up. Euro potentially weak for a wee bit.
Yeah.
And I can't even find the Euro CAD.
We discussed the, you know, we discussed the Euro as well yesterday, and I was saying something very similar. I'll tell you what it was on the Euro. We were discussing the weekly chart, and this was, I find this very concerning with the Euro. This break here. Get rid of that. That break there. It looks to me like there's a little trend line in here that has just given us a reversal bar. So I also find the Euro fairly concerning as well.
Yeah, look, I go back and always do when I'm in this vicinity, which is at 113.60, the level that I always quote. And let me take the one I just put on off. Not that one. Not that one. But that one. So the level 113.60, that's not it there. I'll get there. Tell it to go there, shall I? Okay, there it is, 113.60. Doesn't look too much as that tiny little red thing, so let's make it stand out as well. Okay, so it's got form through here since we broke back below that level in 2015, which of course was leading into our wonderful Brexit situation that we're now really experiencing big time. But this, what caused that? Can't remember now exactly what caused it. But anyway, that's where we were leading into Brexit, and we've had nothing but indecision or consolidation really since that fell away at that time. So the 113.60 level, this red line, has been very, very pronounced, if you like. Hammered, 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 hammered. Slight break, false break, hammered, hammered. And then we got through it in 2017. And we got back to this level, 123, or let's say 124, roughly. And then we've come back to the top side of 113.60, and we've been there for the last, 1, 2, 3, 4, 5, 6 months nearly, with a little bit of a bump. So you can see how hard this level is to crack, both as resistance and as support. Why I think this can actually break now is because we have had a significant close below it, and we haven't been able to get above that bar. So we're still trading inside that bar that actually broke the level 113.60. In fact, if we can close, well, that was a new month, we've got a long time to go. So probably that's not a pertinent thing to say. But the weekly chart, if I have a look at that, we've had a series of closes underneath that level. This may be another attempt to do that. The reason I don't want to go short at this stage is because when is this going to break out is the question. I've really got no idea. You can see how long we've been sitting here. This is the weekly chart. And who's to say we're going long? Who's to say we're going short? Really, I can't give you an indicator here that says, okay, we're going long or we're going short, with one exception. If I draw this line through here, it's almost giving me what I like to see when I'm trading a false break. It's not quite there, but we're back above that red line, this one here, the trend line, back almost, well, you can't say almost, we didn't get back above it. We pierced it, but we didn't close above 113.60, but then we gapped up to there, and now we're double crossing it, if you like. So that's the one thing that is telling me there's maybe some upside here, back to the top of the range. And that's all I'm talking. I'm not talking breakouts at all. But the range to me is somewhere between 114.60, so 100 pips from the red line, and 112.86, say. So I just think short to the support, then long to 114.60. That's what I've got in my head anyway, and I'll try to play that, I suppose, until these lows get taken out. But it's definitely under pressure at the moment. There's no question about that. And whether it can sustain itself above the 112, let's call it 113 even, if you like, level, is going to be very, very interesting. But if this week closes as a big bearish bar that maybe closes on that level, or even slightly above that level, but very close to it, I think I'll be looking to trade that long next week, but only up to here. You know, I don't know that range is going to break anytime soon. Something will do it. Perhaps it is the Brexit deal when it actually is put on the table. Whether it's long or short, I don't know. But I think that's probably why we've been in here for so long. We're just waiting for clarity around Brexit, and then we're going to move. But at the moment, I'm still top to bottom, mate. So nothing's really changed for me. So I'm looking for the bottom to go back to the top. Same. That was a long way to tell you, I suppose, but that's the way I look at it. And you're thinking short. Why?
Well, I am thinking. I'm thinking short. Sorry, mate. I'm just having to think when I might need to hedge early here on this chart.
If you need to manage your trade, then do that, mate. I'll continue.
Yeah, I might need to. It's pretty. The price action is very bullish. I'm just going to show you what I've got here.
Yep.
Very, very bullish opening 15 minutes. Now, this is usually a pretty decent barometer for the day, so there might have to be a hedge put on here. This 15-minute bar is very, very positive, so we might have to hedge pretty early on this one. And you know what? I'm going to do that. I'm going to hedge here because I think that there's a little bit too much. That's a pretty tight hedge, but that's okay. That's okay. I'm having to hedge here because this bar is far too positive, and it does suggest that we're coming back to these highs. Now, if we do come back to these highs, there's an opportunity to maybe at that point take the hedge away. Now, if that isn't to happen, it doesn't look like a huge issue. It doesn't look like a huge issue. The other thing with this is that this trend line is just surviving above here. So this is where it's going to get a little bit complicated. So I would suggest to people that they probably don't want to hedge. They're probably, because that's a pretty tight hedge. But I would suggest that you might be better off just closing your trade down rather than worrying about this. But there's probably enough bullish price action to suggest that this might be wise, and then this can be managed in a couple of different ways. So either the hedge comes off here, maybe at the highs, or we look to take profit on the lower end, and then try and get back in at a different point. But there is possibly some weakness here still. Anyway, or we can maybe take the hedge off at a slightly different point. But that is a very, very positive bar. The other thing is that the 5-minute chart as well, this negativity and then the sweep back to the upside does suggest that there could well be some further buying in here. So this is the tightest hedge I've ever done, I have to say, but I'm okay with that.
Again, as you said, you know, if you're not experienced trading, guys, you could enter a world of pain going into a hedge situation because you don't know what to do. Really, you don't know how to manage it. So,
yeah, absolutely. You know, and the way that I like to manage these is to see what can establish itself. My problem with this at the minute is that me waiting to see how this is going to establish itself is not a great picture. You know, that kind of bullish price action there isn't the best picture for me to try and figure out. So, you know, I've got a little bit of thinking to do, but that's okay. Things are nearly flat, you know, if you like, at this particular point, and that just gives me a little bit of room to think, and that's what I'm going to do. I'm just gonna let this market kind of tell me which way it's going to go, one way or the other, rather than having to second guess what's going to happen. I think the hedge in this area is probably the most sensible thing to do. So I would suggest to everybody else, maybe close your trade and see what happens in the next few periods. Difficult opening actually, and no, not that much different to yesterday, where we had this area here, where there was, I mean, the bars aren't as aggressive, but it's very indecisive until eventually it starts to break out. And I guess that's what I really want to see here. If it's going to break to the upside, I'm okay with that, because we can think about what we're going to do at the next potential level of resistance. If it breaks the downside, that's cool too, because then we can start thinking, okay, the upside still looks like it's got some legs, and we can figure out what's going to be our new entry for some upside, so we can balance this upper trade. The good thing about hedging tight is that the balance becomes a lot easier. So as long as we get some true bounces off some levels, we should be all right. So the idea for me now is going to be, see if I can trade it to this upper level here. So we can get it up here, take the trade down, possibly re-enter a short. If it breaks through, then we will, in fact, we probably don't need to re-enter a short, so we can probably just take the trade off here if it goes up there. If it breaks through that point, we'll have a look at another re-entry, and then look for this upper line. So so nice tight hedging, and a fairly kind of clear way to enter this. So if you want to follow this, but you're not kind of too au fait with a hedging, the best thing to do is to take the trade off here, re-enter above again. If it's sorry, you wouldn't go long. To put a stop at the high again, and then re-enter here with a stop at the high again, and see if you can trail this down. Now, the only issue with that is that, and this is my problem with using stops, is that you have to calculate your risk every time, whereas the risk on this is minute. Mine is done on taking a fraction of the account and putting a fraction of the account on. So you are always kind of looking to ease into it and ease the account one way or the other. So it's a completely different money management skill. So I'm not even sure whether you could use the stop placement, because you're going to have to calculate risk at some point. Oh, you can't see the FTSE, sorry. This is the FTSE here. So I've got a tight hedge on here. And what you want to do is look for your next level. Now, the issue you're going to have... Oh, yeah, the diamond formation is a bearish pattern. The problem with the diamond formation now is that it's been broken down, because really you want the diamond formation. It could still happen here. Let's just have a look if it's still potentially in existence here. Yeah, it could still be significant. When you see a diamond formation at the lower end of a market, you have to discard it, because the diamond formation is a topping pattern. It's not a bottoming pattern. Yeah, it would still be in existence. So anything that's going to kind of give you these four sides sloping one way or the other, it could be there. The issue with this particular diamond formation is that we don't have multiple touches along this particular wall here, so we don't actually know that the diamond formation is in existence, and we won't know until we maybe fail here and try for another drive to the upside. So it's not necessarily there yet, but it's a bearish formation. It's a topping pattern. No, it's not right at the highs here, but it's a topping pattern. They are very, very rare, and because of that, it's a pattern that people probably won't trade, and it's much more useful to use a diamond pattern for measured moves than anything else. So this right hand wall, it's not there yet. We don't really know what the we don't really know where this high is, so we just have to wait and see what happens there. So that's where we're at, mate. That's where we're at. We're just gonna see if we can manage this trade one way or the other. Now, obviously, the swing to the downside is going to be slightly different, and will probably mean that we could take it off here, or we could take it off here. So what I'm looking for is places of support and resistance. This is an obvious one. After that one, it gets a little bit more tricky, because you've got a few up here. So if it takes out that area, then we're in a little bit of the questions are really going to start to arise. So we'll have a look at that point. But at least we've got just some room to think now with a couple of different trades on in different directions.
All right, mate. Happy days. I'll come back and finish this euro very, very quickly, guys, and hopefully give you some clarity around what I'm thinking, because oftentimes I can confuse people by going in different directions. I put this rectangle on my chart, and the reason I've done that is to give you exact clarity of how I actually trade this cross. And when I'm in a rectangle such as this, I'm looking to trade it from the bottom of the rectangle to the top of the rectangle, and from the top of the rectangle to the bottom of the rectangle. That's it. There's nothing more complex than that, or more complicated rather than that I'm trying to do. So it's really tough to trade when I'm at dead set the middle, and I'm at a line on the chart 113.60 that is an absolute line in the sand as far as this cross is concerned. And further to my point, you can see how often we've been across and across and across and across this particular level of 113.60. So until I get to the bottom here, it's really tough for me to trade. I know I'm looking at a daily chart here, and I've probably got an inner range on a smaller time frame, but my bias has to be, given these two candles here that have come off a whole number as well, 114, and then a bearish bar to follow, I can't think long at this point. The other way to look at that is when I come off the bottom of a range, or the bottom of a rectangle in this case, and I see a reversal bar or a potential reversal bar, I have to see a second indicator or a second indicating candle for me to find a long. And that second indicating candle is normally something that looks similar to that, but sitting over here. Now, this was potentially going to be that candle, and that would have been a signal to go long, but there's too much bearishness in it. It's just too much of a bear bar, and it's followed these two tweezer tops, if you like. So it's impossible for me to go long right now. And that's why my bias on a couple of the euro crosses is still to go short. whilst I can't trade this one short, certainly on the daily chart, maybe there's the opportunity to do that on the 30-minute chart. So that's where I go, and then I find something else that interests me, and they're normally trend lines or horizontal levels or a confluence of both. So at this point in time, whilst I'm thinking potentially short, I don't have a reason to trade short right now. And if I can find one, then I'll definitely consider it. But at this point in time, no. So I carry that bias through to what I was looking at before, and that was EuroCAD. And EuroCAD I find at a resistance level. So I'm looking for a short already. I've got a range in here. This is the 4-hour chart. I've got a range in here. So if I put the 30-minute chart into play, again, what I'll look for is a rectangle. Now, I really don't have a great rectangle here. It's more of a, I don't know what it is. It's been broken, the rectangle, if there is one, too many times to the downside to ignore that. So I really don't have that that luxury. But what I do have is a series of potential reversals. So we've got a double top here. We've got double tops all the way through on this level of 151.12 as I've got it. So I couldn't possibly trade long at this point. I can't enter the market long here because we're at a dead set resistance level. So if I'm thinking any trade at all, it's going to be short. But obviously I can't just go, okay, because I'm at a resistance level, I'm going to trade short. I need reason to do that. So I'd need to see either a breakout here that became false, or I'd need price to get down here so I could think about maybe going long. But with my bias for the euro to go short, then I'm probably only thinking short. So the only thing I'm thinking right now is let this thing break, take out the highs, take out the stops, if you like, and find liquidity up here. The market, or the big boys, will find liquidity up here, and then we can look for a drive down short. If that's not the case, then this could take off. Absolutely could take off, because of this big bullish scenario here. You know, if they're Fair Income, these guys, they're going to continue to drive this. There's no question in my mind. So we could be at 152 very, very quickly here if this does decide to break out, and that's no drama. I don't mind that at all. The only thing will be a little bit sad is I won't be with them. But if it comes back down here, I may have a chance to do that, but not from this level. So the only thing I'm thinking now is potentially a short, but I've got to take out these highs and then come back below them before I can think of doing that. So bewilderment is the name of the game at the moment. It's a matter of waiting to see what the market actually shows me. And pound's interesting. Dollar yen I found interesting as well. This latest bar's got me. This is the 30-minute chart. The reason it's got me is it's something that I like to trade. But I think maybe it's not so bad. There's 6 pips. Put my stop where? Here somewhere. Here. That's the problem I've got. But I can definitely see some downside here. But I don't like trading 6 pip candles. It's got to show me a bit more than that. If you're interested, then I think there's a potential acceleration point here for the candles to, or for the traders, if you like, to drive price down to at least the daily pivot. It's just not the right setup for me, but it's very, very close. If you guys are still in these trades with me, by the way, that we took a couple of weeks ago now on Euro Pound, and you haven't been in the show for the last few days, I've got my stops at entry, which was here. We traded this bar here, if you'll recall. And we've taken profit twice. We took profit here. No, it's a little bit higher than that. We took profit here, and we took profit where that white line is as well. So the only thing that can happen here is we either win a nice amount or we win a big amount, one of the two here. So I'm not going to move my stop at all until we reach the 84 mark, or around about the 84 mark, which is here. If we do that, if we're fortunate enough for that to happen, then I'll probably reassess my position. What I'll probably do then is start to trail.
That's a great trade, that, isn't it? Because that's the trade that if Brexit clears up eventually, you're going to be taking quite a few chips off the table.
Yeah, it'd be nice if it did, mate. That's true. That's why I'm kind of trying to keep my stop as loose as I possibly can. I think entry is probably the right place for it. And as I said, I've got no intention of doing anything with the third part of this until we get down to the 84 mark. And at that point, I'll reassess and see what's going on. If we smash through that, then I won't do a thing. But if we start to hesitate here, what I might do is move my stops down a little bit tighter than what they are. And if it goes back through them, I'll look for another entry. But that's
I like it.
Up nicely. Euro yen's a little bit more suspect. Euro yen we entered on when? What did we trade here? We traded this part, didn't we? Yep. Okay. So entry was here. That's where our stops are right now. And our thought process was that this confluence area was absolutely our second take profit level, because the chances of going through that were quite remote, certainly on the first attempt. So again, we've got our stops and entry, and we've banked twice, once here, and that it's still got potential to break through here, but the most obvious the most obvious point of conjecture here was, as soon as we hit this level, we were going to pull off it. There was no question in my mind about that. So I think I gave everyone in the show the option of getting out completely here, or just giving it one more chance to break through that level, which is what I'm doing. But there's every chance that stop will be taken. If that's the case, we've still got 2/3 of our trade in the bank, and we can't be harmed because that's our entry level. So we can't lose here again, which is awesome. That's the way we like it, of course. Nice position at the moment because we've got a potential pivot bounce, but we've also got the daily pivot sitting here, and that's going to tend to want to bounce a little bit off or in between those pivots. If I didn't have a trade on this right now, I would seriously consider putting a short underneath that bar right there. I don't know if it's, I don't need the hedge, and that's why I'm not doing that. If I was in any risk here or anything on the table, I would probably take that as a hedge. And I think that would be a good position to take, because this could obviously, and again, what I'm looking for is price to bounce off resistance and go back to support. The support in this case is the bottom of this channel, which is down here somewhere. So if I do get taken out, that's the very first thing I'll look for, is a lower high here, so I can get back into that position. But let's give it the chance that it deserves, and if it can go, then happy days. What else is going on? 30-minute candles, we've got new ones, of course.
We haven't looked at oil yet, have we?
Yeah, I had a little squiz at it. That's WTI on the 4-hour chart. Let's look at the daily. And I thought this was just a little bit hard to read, but if I'm honest with myself, I'm thinking short right now, but not very far. We're really hugging, the pivots are very, very close together, as you can see.
Yeah.
And when that's the case, that's obviously confirming what the chart's telling us anyway. The chart's telling us that we've gone into consolidation here, and the pivots are just confirming that. So until there's a reason for price to break away from here, ditto the euro, ditto euro pound, ditto pound, etc., until there's a reason for this to break, then I suggest that we're not going to go too far away from these pivots. and that makes it difficult to trade on a bigger time frame. But it makes it relatively easy to trade on a shorter time frame, because if you can find where the top and bottom of the range might be, then it becomes a case of, okay, let's say where daily pivot is the top of the range, monthly pivot is the bottom of the range. If that's not the case here, but if it were the case, then that becomes a pretty easy assignment for me, because I look to trade off this one down to this one, and then I look to trade off that one back to that one. I don't trade as soon as it hits it. I wait for a second signal, but that's exactly what I'm trying to do. So every single day, if you watch me in the show or anywhere else, you'll find that I'm trying to trade off a resistance level to a support level, and vice versa. That might be a pivot, might be a trend line, might be a channel, might be a rectangle, might be a triangle, it could be anything. But that's exactly what I'm trying to do all the time. So
yeah. Just quickly on the euro, because we were talking about the euro, weren't we? And you were asking why I'm bearish.
Trend line. You told me that before.
Yeah. Sorry, mate. Yeah. So it's about the weekly chart for me, the euro.
Show me.
Oh, okay. So the weekly is the issue here. So, euro dollar.
You sorted with your trade, mate? You're all good?
Yeah. That's absolutely fine. So I can just leave that run now. The hedge is just easing up, so it's working out pretty well. It was definitely the right decision to get the opposite direction on that one. Yeah. So with the euro, there's a few things that concern me with the euro. Firstly, Mario Draghi's speech later in the week is potentially a driver for the euro, and also this the weekly that for me is the issue. So actually breaking down last week's low would be kind of dangerous, and it looks like we're certainly giving that a good shout right now. Now this is a little bit of a pattern within a pattern. It's not quite a flag, but it does look like a bit of a channel here. Actually, let me see if I can get a decent looking channel. It does look like a channel here that's broken down on the.
I'd call the flag.
Yeah, so some people would call that a flag, and certainly we can use the thing with a flag is that we'd have to measure it in different ways. So if it's a channel, we'd measure it within the channel, which would lead us down to around about here. If it's the flag, in fact, I'll mark these both these areas off, and I'll tell you why I don't consider it a flag in a second, but it's going to be everybody's personal thing. So the flag would be measured from pole to the low of the flag, and then you're kind of looking at that. So that would take us that little bit lower, depending on where it is. Now, if we look at this in context on a longer term time frame, this would be the channel, this would be the flag. I'd say the channel is probably a more, I mean, it's certainly the conservative area. So if you're looking at downside, that would be an area that I'd certainly be probably a bit more interested in considering for a bounce. Now, the reason that I don't consider this a flag is because with a flag, you don't want too many periods. If we're thinking about the kind of conventional way that we would use a flag, firstly, it should be on a daily chart. But if we are looking at the pattern on a weekly, when the flag formation happens, the flag shouldn't really be any more than 5 periods long, because then it does start to run into kind of channel territory. And I suppose just because I'm looking at the conventional way that they would have written about in books many years ago, that's why I would look at this more as a channel than a flag. But I think both would be a valid way to measure, and that's what we're looking at really, because ultimately you're still looking at breaking a back test of a trend line, and then it's just about how, if you consider it a flag, you'd measure it in one way. If you consider it a channel, you'd measure it a different way. So there would still be some validity in measuring this to this point, because it almost starts to become Fibonacci levels and a range from the phase. This phase started here and ended here, and then there was a new phase. So if you just don't think of it as a flag and think of it as a phase, then you're kind of measuring the length of the phase and suggesting that the next phase will be something similar.
I think of it as support and resistance. I don't give it Tinker's cuss, what they call it.
Exactly, and that's the point, isn't it? When it comes down to it, the names of these things are actually pretty irrelevant.
Yeah, it's recognizing what they're all about and what they're saying and what the market's doing there.
Yeah,
that's what it's about. It's not about a name. But having said that, I'm fully in favor of giving everything a label because it's far easier to remember.
Yeah. Yeah.
But that's all there is, you know. To me, you can write flag in a book, you can write whatever you want in a book. At the end of the day, it's support and resistance that you're looking at.
Yes, absolutely. That's the bottom line, isn't it? Even when we're sort of like talking about head and shoulders and things like that, the head and shoulders is effectively a lower high.
Yes, absolutely.
You know, so yeah, I completely agree with that, mate.
Look at that little chat that we've been looking at for I don't know how many months on the left shoulder and the left neckline.
This one over here.
Yeah, the higher shoulder, not the tight shoulder. That shoulder, yeah.
Yeah.
And the neckline, which is the swing. Sorry, the swing low after it.
Yeah.
That channel that runs from there straight through the head to the other side that we've been looking at for months.
This one here?
No, going down, mate. Sorry.
This one here.
Down, down, down. Yep, now you're talking.
Yeah.
It's still in there.
It absolutely is. It absolutely is. I'm gonna quickly have a look at this and see what that looks like with that measurement, because if those two lines meet, then we might well have some confluence here.
They will.
Yeah, they look pretty close, don't they? Actually, it broke out here. They're right on the money. So yeah, it does look like this this particular line is going to be respected at some point for sure.
Again, yes, absolutely.
Yeah, I like that. I like that. The interesting thing really with this one as well is that where was that that head and shoulders? Because again, I'm looking for some kind of equilibrium when I'm looking at a head and shoulders pattern. So if I'm considering this as a potential for a right shoulder, let's do it along here.
Yeah, it got way too long in the tooth.
Yes, it did, and it looks to me like this area is problematic here. But it looks to me like this is really the pattern, and the right shoulder actually finishes here. And if that's the case, let's see where that measured move brings us down to. It breaks out there, so that leads us again
with the same spot.
It could well be the same spot. So there does seem to be, and look at that. I mean, it does actually seem to have a pretty decent looking area of confluence that people will be watching. Absolutely, and it looks like it's if this is to work out, it looks like it could well get there in the next few periods as well, next few weeks as well. This is a weekly chart, so it's got a little while, but maybe by the midway point of the year, we could see the euro right down to 111.
It certainly from that chart looks more likely to be there than it does to be at 115. That's true.
Yeah.
But I don't know. It's not up to us. It's up to the British Parliament, I think, as to what happens with the euro.
Yeah, well, it's interesting, isn't it? Because the pound has certainly been much more affected, it seems, to the Brexit jitters than anything else. When it comes to the euro's got its own separate issues. There's so many side stories going on. You know, when you consider Italy, and you consider the slowing down of the German economy and the eurozone economy generally, then it would suggest that the euro's weakness, well, it's possible that the euro's strength is actually just from the fact that they're negotiating very, very well. But we might start to see some euro weakness come into play if when the Brexit mist eventually clears. We might see some euro weakness come into play, because then we start concentrating on some of the major issues in the euro bloc, which Italy, it's a year and a day since the Italian government changed hands, and we had those austerity measures that the EU, sorry, the ECB had enforced on the Italians that were so vehemently rejected. So we may well see the euro weaken after Brexit, because that particular aspect is cleared, and then we get back to some geopolitics. It's possible, isn't it?
Yeah, look, I haven't been paying that much attention to the economic numbers coming out of the Eurozone, but I read this morning that they haven't been too good. And
No.
if that's the case, then when we do return to looking at things like that, then yes, we could definitely see some downside in this pair.
I think the speech on Thursday. Did you say it was Thursday that the speech?
Draghi's on Thursday.
Yeah, I think that could be really significant. The speech from Mario Draghi, because what we're looking at is a euro that could possibly be in a bit of a hold here until Thursday. It might not even be for swing traders a longer term option. Now, if we mark off the low end of this weekly range here, I probably wouldn't want to trade that until I saw, until Thursday had passed. But if it breaks and returns to this point after Thursday, then I think that the downside for the euro is probably going to be fairly significant. But you can see that this would be, for that very reason. I don't know if you're bullish the euro, but for that very reason, on the short term, I would be kind of bullish the euro, because if we're waiting for some news to be released, and that news hasn't happened yet, that would suggest that we're going to get a hold until that news happens. So looking at upside would probably wouldn't be a bad option, and certainly the evidence of price action and what the bars are suggesting is certainly for upside euro. And if we're coming right down to some short-term potential entries, I know you'll have your own specifics here, but short-term potential entries, this bar right now is looking fairly positive as a potential entry point. So if we see the hourly close, if this closes in the next 8 minutes or so, 7 minutes to the upside and breaks through this level, then I wouldn't be at all adverse to suggesting that the euro was probably going to plump itself forward at this particular point. Looks like another level there that it's breaking out of.
Yeah, look, there's a couple of potential entries there from my trading perspective, but my bias wasn't for longs yet. My bias was for shorts to get long. So whilst I could have, I guess, speculated on them, I didn't, and that's the answer to that question, I suppose. I don't see that breakout at all, and it may go on. Absolutely, it may go on, but I don't see it just yet.
Yeah. Well, it's got about 5 minutes to go. Do we have any pending announcements? I don't think we do we?
There was services PMI, I think, on the pound. That's in 35 minutes.
Okay, so let's bring that in here. Now that might well shape how I trade this FTSE here. So we just had some European data. Spanish services PMI came in just slightly better than anticipated, but lower than the previous. Italian services PMI broke through, so we're back above the 50% line, which is a good sign. That's very, very good. French final services PMI also has broken back into the upside. We've got German final services PMI. This could be quite an interesting number depending on how that ends up, but 3 decent numbers. Yeah, another fairly decent read on that as well. final services PMI, you think with the these ones here calculated would come in positive, and then yes, we do have services PMI out of the UK. So there's a few bits and pieces that we're waiting on for the Eurozone and the power and the United Kingdom as well. So let's have a. I mean, that's really had a hugely positive effect. I don't think there's too much that is going to switch this around, is there, for the euro? No. So we may well be looking, especially if retail sales comes in positive as well. They're looking for a decent read here. So I think we may well be looking for some upside in the euro here. So looks like a pretty good trade. You're bearish this, are you?
No, only down to that level, and then I'm looking for longs.
Down to this level?
As I said before, I can't see the level. Where are you? I can't see your chart.
You can't see much.
I can see your chart. I can't see your crosshair.
Oh, okay.
Yeah, down to the low, basically.
Right down to this low here.
Yeah.
Okay.
That's what I was looking for.
Well, let's see what happens there.
As I said before on EuroCAD, if it goes without me, and that's fine. Of course, you'd like to be in it, but you can't be in everything. And it's just, I wasn't ready to go long.
Yeah.
So it's as simple as that.
Yeah. So 4 minutes left. I'm just going to quickly bring you a quick FTSE update. The hedge is proving to be a good decision at this particular point. We're going to have to see how this. There's so much volatility, isn't there? Jeez. I mean, if this ends up a weak bar, that might be the point to take the hedge off and then just leave the downside do its thing. But let's see what happens here. I would really like this level up here. So I'm looking for around about another 14 pip to the run to the upside. And it will be fantastic if that can happen in the next 3 minutes, because my assumption at that point would be with a news announcement due, we could start getting an ease back into something down here again. So there's two ways I could play this. If it pops up here, I could just put a stop on the buy order, and then if it comes crashing back down again, then it's going to take my stop out and potentially keep going. If it keeps going, then I can just leave things run and let the hedge continue to do its job. Obviously, the worst possible scenario, which could always happen, is that it comes back down again, takes out my stop, and then starts to take off. But it would be a much better thing for that to happen, because at least in this area I can make a new decision. But you can see that there's a little bit of support here, so the hedge isn't in a particularly safe area. That's the only issue. So there's a couple of options here, and this is this is where the world of hedging can start to take some fairly intense turns if you get it wrong. So there's the option to take it off here and maybe re-enter, but then it could start to drift eventually with a spike. Stops at entry is another potential answer, or we just leave everything alone and see if the market will just settle down. The problem is it seems so volatile. I'm not sure whether I'm going to get too many clear indications about what's going on. One thing I would say is that this 4-hour bar that we are currently forming and we're about to close in the next 50 seconds or so does not look particularly negative. So even though I'd look at this area as a possible move back to the downside, I'm not sure whether that move back to the downside will be too significant. I think it may well be that it just drifts back down, probably to entry, and then moves back up again. So I'll probably just leave things as they are and see if we get back to these highs instead.
I'm trying to work out what happens next myself, and I'm trying to work out where this volatility is coming from. There seems to be no reason for it.
No, unfortunately, Bloomberg is no longer free, and I get a little bit of news in the morning, but there are probably unfolding stories. I.e., this China story is probably still unfolding, and because that's still unfolding, it's making the whole thing just that little bit trickier to understand. Because you're right, there's probably some kind of announcement going on, or this is possibly about the the PMI levels from the Eurozone, because remember, we are trading an indice here. We're trading a stock market, so the stock market may well be reacting to the fact that we've had some positive data out of some of the customers. You know, some of the customers that would be traded with the FTSE 100. So it could be as simple as that, mate. It could be just you know, the simple fact that that the Eurozone has put in some decent figures and the FTSE is reacting to it.
Yeah, look, maybe the breakouts are real. I don't know. I'm not. That's the case, and I'm more than willing to trade them as false. So that's going to be my focus for the next couple of hours.
Yeah.
See if the gaps that we've just seen on the euro in particular.
Yeah.
Is in fact the breakout, and if it's not, then I'm going to jump on it going the other way. So that'll be my focus.
Well, let's see how the euro ended up. Yeah, you see, this to me looks like you know, again, it wouldn't be for me to tell you guys how to manage this, but this looks to me like a pretty decent breakthrough, and it looks like a decent back test. So it stops in this area here around about 113.30. Then there would be a trade to the upside, in my opinion, that is an offer. So that's another possibility for everyone.
Yep. The only thing you would need to be a little bit cautious of is that you've got a daily pivot untested sitting right above you as well. So
good point. So we haven't tested that. Yeah, good point.
Apart from that, I totally agree with you. I'm going to hang in here because I'm not yet convinced, as I said, that this is yet a breakout. If it is, then fine. I've got no drama. Except that I wish I was in
it. Yeah.
But
all right, mate.
If it's not, I'm probably in a pretty good position to take advantage of that as well. So that's what I'll be looking for.
Okay. Well, let's hope that the clarity eventually starts to come into play. We've got a short and a long on the FTSE. We got a few trades still running with Jeff as well, and we got a potential euro setup coming up. So. Hopefully you guys can make some decisions on that, and you've got some setups that you can take. And again, hope you enjoyed the show as always. Back same time tomorrow, same trade time, same trade channel. We'll do it all again, and we'll see if we can find some more trades and see what's happened to the trades that we're in and how they ended up being managed. But have a great afternoon and evening wherever you are in the world. And same to you, mate. I'll see you tomorrow morning.
Cheers, mate. Topic for tomorrow, or a topic for tomorrow. What happens when oil is no longer the driving force of energy in the world?
Oh, that's a good one. I like that. Okay, so if we, I have to say, today would have been difficult for me because I'm distracted by the complexity of this particular trade. But yeah, if things are a little bit easier tomorrow, let's get to that.
Yep. So what's going to be the biggest market we can enter when oil's no longer, or coal and oil, those two filthy things, filthy black rich things, are no longer driving us? And how soon is it?
I think that's a very, very good question. How soon is it, and how can we take advantage of that particular market? I think that's a really good question.
Ben, sorry, I just saw your thanks there. I did see you in this morning show as well, having sound issues. Nobody else did, mate. So you must have had an issue. I'm not sure what that would be. So, adios. See you tomorrow.
Yeah, adios, amigos. See you tomorrow. Have a good rest of the day.